The interview you're about to listen to is with Matthew Tuttle of Tuttle Capital Management. You might not recognize the name, but you definitely recognize the product. I'm talking about the man, the myth, the legend that made an ETF, which is Inverse Cramer. That's right, we got an interview with the guy who said, hey, people want to bet against Cramer so much, we might as well make a vehicle for them to do it. Among talking about that and how you make ETFs in general and his opinions on the markets, we get into other exciting things that relate to just having an entire career within Wall Street. I truly think you're going to enjoy it. If you want more of this type of content, don't forget to hit the like button and subscribe to the channel. Enjoy. What is going on, everyone? I have a very exciting interview for you today. I'm sitting here with Mr. Matthew Tuttle of Tuttle Capital Management. So mainly, we're going to be talking with the guy who really brought us the Inverse Jim Cramer ETF, but obviously there's a couple other things we're going to be diving into. I'm sure you're going to enjoy it. Thank you so much for joining me today, Mr. Tuttle. How are you doing?
I'm good. How are you?
I'm having a great day. So much exciting things going on in the market between stocks. I mean, I'm sure you've been paying attention to retail's explosion with zero DTE trading, crypto, futures. There's always just something going on. Recently, it's been the banking crisis. Now it's inflation. Now it's banking. And it's just everything. I mean, just craziness across the board. And I'm sure for you, obviously being in this industry, like I'm sure it's exciting times for you as well.
Oh, yeah. No, I mean, I love this stuff. I wish the market would actually go somewhere, but I mean, at least beneath the surface, there's fun things to do.
Yeah, I mean, it seems like, and I know obviously we're only at the end of April as we're filming this now, but it feels like it's just going to be a year of chop. And I'm sure in certain subsectors, there's going to be opportunity here and there. But honestly, maybe that's a perfect segue because it seems like, and I don't know if it's quite the meme or any of that, but folks, I want to talk about the ETF, and I think it's safe to call you an ETF expert. So obviously we're going to be getting into the Inverse Jim Cramer, but before we talk about those exact details, could you tell us a little bit about how you even become an ETF expert, how you launch ETFs, how you even got to be running Tuttle Capital Management? Like, what's even that pathway for people who might be interested?
Yeah. So, I mean, I got hooked on the markets back in 8th grade, which was probably, 1982, give or take, which you can kind of guess I'm old. And really have been trading my own portfolio ever since. Okay. Got into, brokerage firms in the 90s, insurance companies, and really was horrified by what passed for advice and what was being done to retail investors. I was a broker and an advisor during the internet bubble, and seeing what was happening to investors just horrified me. So right after that, we started our own wealth management firm and started working with individuals. Then we had other financial advisors come out and say, hey, we love what you're doing. Can you manage money for our clients? So started doing that, and then also became horrified by, the lack of knowledge out there in the financial advisory community. So in 2015, we started launching ETFs. First we were kind of trying to help out financial advisors, but then we really morphed to, when I saw kind of what was going on in FinTwit, especially after COVID, kind of a new retail revolution, a lot like what I saw, in the internet bubble. I really said, I love what these guys are doing. I want to help these guys. So we started launching a lot more products designed to really help retail.
Is it difficult to launch an ETF? Is it like many hours and a lot of payments to lawyers and this, like to get that all set up? Is it relatively easy? Like, I don't know if it's common knowledge of how you even launch an ETF.
So, I mean, if you've never done it before, yeah, anything's difficult. Once you've done a million, it's not. Typically for us, it's, 15 to 20 grand up front to a lawyer to draft a prospectus. Prospectus gets filed with the SEC. The SEC has 75 days in most cases. In my case, it's typically longer because we do some different stuff. Gotcha. During that period, they come back with questions. The lawyers answer the questions. Then after that you launch. And then it's just, the day-to-day running of the ETF, which depending on the type of ETF might be hard or might not be. So it's something like SJIM is very hard because we've got to be watching, Jim Cramer from 9 to 10 every morning, from 6 to 7 every night, and then monitoring his Twitter account for any tweets.
So with you talking about SJIM, and for the listeners who maybe haven't put it together, that is the ticker symbol for the Inverse Jim Cramer ETF, SJIM, which I believe is one of your more recent vehicles that you've launched to the market. So how is that done? So you talk to your lawyers, you got to file with the SEC. I believe it went live on March 1st of 2023. Please correct me if I'm wrong.
Something like that.
Okay, so it went live. It's recent. This is a new thing on the market. So that seems difficult because he talks a lot. I mean, I talk a lot. I think we all talk a lot, but that guy talks a lot. So are you parsing it of just his opinions, or are you waiting for him to do filings and perfectly inverse the things he's actually trading? Or is it literally just his thoughts on anything and you're like, oh, we're actually going to inverse in the opposite?
So, what we're doing, he's on every morning from 9 to 10, and then he's got Mad Money from 6 to 7. So, and he tweets. So we're watching all of that. What I want is definitive, buy. Hey, if you don't buy Amazon here, invite me to your funeral. Boom. All right. I want stuff like that. Gotcha. And I want definitive sell. So if we can get definitive, and we got 3 people, I'm one of the 3 who's watching, and, and sometimes it's simple. He comes out and it says, hey, if you don't buy Amazon here, invite me to your funeral. Okay. That's a buy. I mean, that's pretty obvious. Other times it's, not so much. So, this morning, and I know we're taping this, but, this morning, Tesla, he wasn't giving an opinion on. So, we made a judgment call on what we're doing with our Tesla short. Gotcha. Then what we're looking at, he makes so many calls every day. We want the good stuff. So I want to be short whatever is really high. And, if we're going to enter in a long, I want it something that's, coming off of some sort of a bottom. Because, what we really want to do here is we want to be shorting or doing the opposite of the consensus. And the consensus is buying stuff as it's going up and selling stuff that's going down. We want to do the opposite of that. So, there's watching what he says, coming up with those definitive picks, and then deciding whether that definitive pick fits in the portfolio or not.
Good old mean reversion. How did this come about? Did you particularly have an issue with Jim Cramer, a bone to pick, or is it more of just you saw it is a Twitter, Reddit, social media culture itself to call out Inverse Cramer? There's multiple accounts that it is a thing now in the world of finance to say whatever Cramer's doing, the opposite will work 100% of the time. Is that where it came from? Or I'm looking at your website, and folks, if you're listening to this right now, watching this, check out the website. Matt and your team here, you guys have pulled out all of the major call outs that mainstream media has gotten wrong, which I find absolutely hilarious. So are you just kind of a contrarian to classic finance media suggestions and advice yourself? Where'd this all come from?
Yeah, so they're really 2 things. Again, I've been in markets for a long time. And one of the things I notice is the consensus, which we said is typically wrong. People get all bulled up when the market's going up around tops. They get all bared up, around bottoms. And, I've always looked for, how do you monetize that? And, and I played around with a lot of different ideas, American Association of Independent Investors and, put call ratios, all that stuff. And nothing's ever been compelling. And really, I've got a friend who was in the industry and, likes to tell me when he's doing stuff. And, he would text me, hey, I'm going into this, I'm doing this. And he was always wrong. And that idea started to crystallize in my head. And we've all got a friend like that.
Yeah.
The idea started to crystallize in my head of, wait a second, this might be the way to do it. And then I pivoted to Cramer. Because Cramer's the consensus on steroids. And, so that's what really got me, here is the way to monetize the consensus being wrong. And then, in the other aspect of it, and one of my passions in wanting to help retail investors is it pisses me off when, they bring him on knowing his track record, but they always bring him on with deference. There's no accountability. There's, hey, we're going to bring Jim. What do you think about the market? There's no, hey, Jim, we brought you on yesterday to ask you what you thought, and it was totally wrong. Are you going to get it right today? It's, we're going to bring on Cramer, and he's going to tell you what he thinks. And it's like, there's got to be some accountability there. And, and you see some creeping in now, and I've gotten some credit for that, like when he cried about the Meta call.
Yeah.
And, and he did accountability for Silicon Valley. I don't know that he would have done that if we didn't launch these funds. And if I could have a small part to play in some accountability, my job is done.
Yeah, that's fair. And obviously we're completely throwing out just conjecture here, but in the time that I've really paid attention to the market, it does seem like he's comically wrong. Is that because was there like a phase one of Jim Cramer where he was as sharp as he could be? Like, how did he even get to this level? Because that's the question I get from my audience a lot is like, if this Inverse Cramer is so accurate, why does he have all of these accolades? Why is he always featured on TV? Why does he have these deals? Why is he worth so much? Like, are we just seeing maybe the end of a career and before this he was far, far better, or what's going on?
No. Here's what it is. And I would assume you're involved in markets, I'm involved in markets. There's at any point in time a group of stocks that I'm pretty familiar with. If you said, Matt, what do you think about XYZ? I'd give you a pretty good educated opinion. I don't know every stock. So if you started hammering me, hey, Matt, what about this? What about this? What about this? You're going to start getting the stocks that I know nothing about. So what am I going to do? I'm going to pull up a chart real quick. Oh, that's going up. All right, I'm bullish. That's going down. All right, I'm bearish. That's what Jim is doing. He swings at every pitch. Now, that's not a criticism. He's set up. He's got to swing at every pitch. It can't be people calling up, hitting him on mad money. Sorry, don't know that stock. Not familiar. Sorry. No, pass. And now he'll pass every once in a while. But, he can't go to that well too often. So, you're getting to a lot of areas that he knows nothing about. He's also, he's got an innate ability to just get stuff wrong. I don't know where that comes from. But, why he's on, understand what CNBC and any news media is. They're entertainment and they make money from advertising. Jim Cramer, you can say whatever you want to say about his stock picking ability. He's an entertainer. And, obviously the advertisers love him, for good reason, because he's always buy. And, so that's why he's on, and that's why he's on with deference, because of that, not because he's some great stock picker.
When I was maybe in high school or something, my parents were like, you should learn a little bit about the markets, watch this Mad Money show. I swear, the first show I ever saw of him, I was picturing this guy in the suit, like it was going to be like just whatever, financial forecasting or whatever. He came out dressed up as a biker with a Harley Davidson because he was talking about hog that day. And I was like, wait, this is what financial media is? Like, and that's exactly what it was. It was pure entertainment, not necessarily the quality that people are looking in the world of markets. So it's interesting that has been almost like a commonly held belief about him. But hey, it's working because he still has that news space. Like it's working for, I guess, like his specific goals, but maybe not who retail or even professionals should necessarily be listening to. I have to ask, has he had any interactions with you? If you're the guy who launches an inverse Jim Cramer ETF, like, do you guys talk at all? Does he dislike you? Has he sent you some like upset DMs? Like, what's going on there?
So when we filed, he had a lot to say on Twitter. He had a lot to say on the show. I think someone tapped him on the shoulder and said, hey, no more. Because the day we launched, now he takes vacations, but typically he'll be gone Monday to Friday. We launched on a Thursday. He took a vacation starting that Thursday that we launched, and it was a couple of days. That was weird. Could have been a coincidence. I don't know. He has not said a word. I've heard some things through the grapevine that lead me to believe that somebody tapped him on the shoulder and said, don't go there. Don't say anything. So I'm constantly poking him on Twitter. I hope one day he'll respond, and that response won't be to block me. But we'll see. I'm not holding my breath that we're going to have a dialogue.
I mean, if it happens, I'm sure it'll just lead to some talk about entertainment. That would definitely lead to some entertainment. I can only imagine if somehow, I don't want to call it a debate, but if you two guys got into a call, an interview, I'm sure it would be exciting. It would be exciting for everyone to kind of listen in on.
I would love that. And we'll see. I hope.
Hey, by the off chance, Mr. Cramer, that you're watching this, we can facilitate. I can make it happen. We'll ask the same questions to the both of you, and we'll see how it goes. But we'll shoot our shot there. So transitioning just a little bit, obviously, this is awesome, making ETFs. I appreciate you sharing your knowledge there, and I'm sure just from the comedic value, everyone's going to like what's going on with the Inverse Jim Cramer, and I'm excited to see how it plays out this year. Obviously, it's only been a small amount of time. I mean, roughly a month, we'll call it. So it'll be cool to see where it actually truly ends. But speaking of from now till the end of the year, obviously, you do have quite the knowledge of the market. Where do you see things going for the average retail person? Like, are there certain sectors that you feel a little bit more confident in? For example, I hear a lot more talk of silver, gold, bonds, almost like those classic things being potentially where people should be this year. Do you agree with that? Do you disagree with it? Are there subsectors that you're excited about? Would love to get your thoughts.
Yeah. So right now, today, I mean, I wish, and I'm on Twitter all the time, and I see you've got the massive bulls and the massive bears, and they're fighting it out. I think both of that is stupid at this point. I think we're in a trading range. We're going pretty much in a straight line until either the Fed or the market blinks. Once that happens, then we get a big move. But right now, I don't think the market's going anywhere. So yeah, I look at the individual sectors. My only real high conviction long is precious metals and miners. Okay. We rode those up at the beginning of the year. Right now, I'm slightly short that area because I think it topped out. But I'm looking for it to sell off a little, come into some support, and then we go long again. Again, only slightly short. But that's an area I'd be looking at, because if the Fed does pivot, the market's going to know before the Fed tells you. And you're going to start to see it in the precious metals, and you'll see the miners start to ramp. We've been short some of the office REITs and the regional banks, and using pops to, reload shorts on that. Besides that, there's not a whole heck of a lot going on. I mean, you've got, mega cap tech, rallying. You've got consumer staples rallying. People looking at that as bullish. I look at that as bearish. I don't think that, I think that's fully invested portfolio managers parking money. I don't think that's conviction buying. So I'd be very careful chasing those names. I'd also be very careful shorting those names. But I think from a practical standard, we look to be more active on the short side as the S&P gets up around 4,200. We look to get more active on the long side as it moves down towards 3,800. So right now, as we're speaking, it's close to 4,200. I don't think I have any long positions. I don't have large short positions by any standard, but we're only short at the moment.
I have to admit, your mindset interests me because it seems like you're naturally more of a mean reverting trader of like, all right, it's gone too much, let's take it off, or it's fallen too much, like let's play the bounce back. And then the thing that you have, Cramer, the one that you made the inverse ETF for, he seems to be naturally trend following. Like whatever the hot good thing is, like it's funny to me of how your mindset inherently of how you view the market is almost the opposite of Cramer, which, hey, it makes sense why you made that inverse ETF. But I appreciate the insights on just commodities and all that. One sector that seems to be popular right now is AI. Do you have any thoughts on that?
I mean, I do. I think it's obvious AI is the future. Okay. I think you need to be careful. Again, as I said, I was around in the internet bubble, and you had, every company in the world putting .com at the end of their name. And, and now, you listen to every earnings report. Like I don't, but someone was telling me that Elon Musk said AI 5,000 times in the Tesla earning report. So I think you got to be very careful with that. There are going to be winners, there are going to be losers, but that is an area that, yeah, you want to pay a lot of attention to, because that's the new hot thing as far as technology. I mean, what this chat GPT can do, I mean, it's just mind boggling. So, I mean, that can't not be the future.
Do you think specifically it will have an impact on trading itself? I hear a lot of people, AI system, algorithmic trading, systematic trading, that type of thing. Do you think that will truly get traction, or do you think it's a little too complicated? Like, as in trading's a little too complicated to do that as of now?
My thought is, as of now, I don't see it happening. Okay. I think the only way I really see something like that working is like the stuff that like Renaissance does, where, it's not, hey, we're going long this stock. It's, we're long this, we're short this, net, we have no exposure, but we're playing little efficiencies and making 5,000 trades, stuff like that. Could AI figure it out? Maybe. But is AI going to be able, to figure out, hey, is NVIDIA going to go up from here? I'm very dubious of that. I've seen some stuff that, you look at something, right, that's interesting, and then you kind of sift through and, I don't know. I think it's too complicated. Things change too fast. I think you need an experienced trader who knows, what he's looking at and can pivot on a dime when something is different.
Well, speaking of traders, and really just because this will be the audience of retail, since you have had a career in Wall Street to the point that like you've survived it, and that seems to be one of the major things of like it is a marathon to survive this game of trading and investing. If you could give yourself tips when you first started, or just even retail nowadays, because obviously the market's always changing, what are the major tips you would give? I've read a lot of your blog posts, and a lot of it just seems to be what you've referred to as like basic risk management, if we want to start there. But if there's any other things where you're like, man, if just people knew this, or if you knew it earlier in your career, could you shed some of that knowledge on us?
Yeah, I mean, I think number one is FOMO. I mean, that is the most, and that's fear of missing out. I think that is the most dangerous emotion you could possibly have. And I think I see that crush people more than anything. And then number two is just, and it's an overarching thing, risk management, which is, your position sizing, your stops, do you do stuff ahead of earnings? And, in really of all of that, I think it's position sizing is the most. I mean, you see, some of these guys on Twitter, I made, 80% this month. It's like, all right, that's great. But the position sizing, you've got to be, dude, and make 80%. I mean, the risk you're taking there is horrific. And, if you know what you're doing, you're cognizant of that, it's a small part of the portfolio, okay. But when I see stuff like that, I worry about like retail guys saying, hey, I'm going to put my whole portfolio into zero DTE options, and say, don't do that. So I think those are really the key things. And then just, get educated. Wall Street is not a kind place to people who are not educated. You can do it yourself. You can delegate. But you got to be educated, because you delegate to somebody who doesn't know what they're doing. And if you're not educated, you don't know that until it's too late.
I think that's amazing input. One thing I always like asking people, especially that have knowledge of the market and more so of a career, is the extremes of something. And what I really mean by that is, throughout your career, could you just share some fun stories of an extremely like good trade where you crushed and everything went right, and then maybe a little bit on the other side where you're like, maybe you had super good convictions on something and unfortunately it went bust? Because I think showing that is like, everyone loves to focus on how good and amazing and trading's awesome and it's easy and you could do it too, and everyone likes to almost sweep under the rug the negative parts. So I would love to hear a great positive and then maybe a not so positive story from you.
So, it's hard to kind of come up with, just from the standpoint of, again, I use risk management. I don't take large position sizes, but I'd say, one that sticks out on the positive side, because it just happened, I was short Signature Bank.
Oh,
so,
okay.
that went down to zero.
Congratulations.
That was I mean, that was a fun one. And, and I've been, I'm short 3 regional banks at the moment and, been shorting regional banks for, a good chunk of the year. But, Signature was a great, great play. The pattern worked out the way I wanted and, went short. And then one day, or I think it was over the weekend, regulators closing down Signature. Beautiful.
What was it like to get that tweet? Did you get like a tweet alert? Like, can you tell us about this? How'd you find out? When were you like, oh, wow. When did you realize it was going to zero and you were making max profit?
I don't know whether it was a tweet or, whether I get so much information coming in, but I think it was over the weekend, just news comes out, regulators are shutting down Signature Valley Bank. So I run up, look, how much do I have? Oh, beautiful. All right, I'm going to make this. And then it's waiting, because, my broker didn't mark it down to zero and it's halted. So, you're staring at it. And I think it took like 2 weeks. And that was just torture. And then one morning you wake up and it's trading at like 20 cents or something. It's like, do I want it? Yeah. Well, I just got out at like, 20 cents. I'm like, I'm not going to be greedy and try to get it to zero. I just want out. I want to see the profit in my account. I think, from a loss standpoint, I think the most important loss I ever had. So, I think one of the most important things that you can have happen to you as a trader is do stuff that's really stupid and lose money. So then you realize, crap, this is harder than I thought. So, I was doing a lot of trading in the late 80s on takeover speculation. And, back then, if the Wall Street Journal put an article saying, there was takeover speculation on XYZ, they were getting taken over. And within a couple of days, they would pop. So we were making money hand over fist. Wall Street Journal writes an article, takeover speculation, we buy options. 3 days later, our options double or triple. We make money. This is great. Fast forward to, 90, 91, all of a sudden the takeover boom had stopped. So it was Neutrogena. So Neutrogena, there was an article in the Wall Street Journal, takeover speculation on Neutrogena, and bought Neutrogena calls, popped, great. That was the beginning of the 90s. And, I'm going to be rich. This is wonderful. We're going to keep doing this. And then there was another one on Scott's tissues and, bought options again, and they got taken under. So whatever the price was, the takeover was less. It's like, wait, how can that happen? So, I lost everything. And, and then there was a string of them. So it wasn't just one trade, but there was a string of them where, I lost money on every single one. And then all of a sudden I'm like, wait, this is harder than I thought. I need to be educated about this. So I ended up losing a pretty good amount of money, especially for someone who was like 22 years old. But it was the best money I ever lost, best lesson I ever had.
Man, I think that's very insightful. To wrap things up, for anyone who maybe has questions or just wants to track what's going on, could you shout out your website, your social media stuff? And for everyone listening, I will put this all in the description of the video so you can just find it from there.
Yeah, so TuttleCap.com is our main website. We do a daily newsletter. We also send out the Cramer trades every day, so you can sign up for them on that. At Tuttle Capital is my Twitter site. So, I'm trading. And so on our newsletter, I'll kind of come out, hey, I think this is going on in the market. Here's our watch list. When I can, I give updates on Twitter during the day. I don't always have time to do that. But, and I also troll Jim Cramer. So sometimes people have fun watching that. I mean, I have fun doing it. So, that's my Twitter handle.
That's awesome. This interview has been absolutely awesome. I truly appreciate your time. Folks, I'll put all of his information in the description of this video. I appreciate your time, and I'm sure we'll be talking again in the near future, but best of luck in the markets and have a good one.
All right, you too. Thanks for having me.